And I feel the magic, magic everywhere. It's all around us, it's in the air. And I see the magic, magic we can share. So much wonder everywhere.
Well, good afternoon. It's awfully nice of you to stand up, but you can sit down. So I apologize, I was on an earlier schedule, but I think you were running late, and then I had a meeting with about 30 people that I couldn't change. So thank you for letting me speak a little bit later in the afternoon. So I am delighted to be here with all of you this afternoon to discuss U.S.-Kenya relations. And you, as members of the diaspora, play a pivotal role in connecting our two great countries. The presentation I'm about to go through came about because after about 3 months in this country, what I realized was the narrative on Africa, and particularly the narrative on Kenya in the United States, was about 20 years old. People didn't understand the dynamism of this economy. They didn't understand the opportunities that Africa and Kenya in particular offered. So since last March, I've been delivering this presentation, which is called Why Africa, Why Kenya? Why you should invest in Africa and why your destination should be Kenya. And it's basically to boost trade and investment between our two countries. And I have to say, I think it's working. Slowly but surely, the narrative is changing. And there's a lot more interest and incoming inquiries into the embassy this year than there was a year ago. So, I'll give you a little personal point of view. When I was the CEO of eBay and Hewlett-Packard, I think both of you know that I was the CEO of 2 Fortune 100 companies. I'll be honest, I thought about Africa about 1% of my time. Many of the businesses that I managed were heavily invested elsewhere, but I tell you what, if I was back in the boardroom today, Africa would be on my radar screen for 2 very important reasons. First, if the war in Ukraine and the COVID pandemic taught us anything from a business perspective, it's that single sourcing from any one country is not smart. Single sourcing is a recipe for supply chain disruption and shortages. We saw that when Russia invaded the Ukraine. What the war in Ukraine and the pandemic did to spur supply chain diversification, climate change has done for energy use. Businesses are now pushing for net zero emissions to meet their climate change mitigation goals. And as you know, Kenya already develops up to 90% of its electricity from renewable sources, and future additions to the grid will all come from solar, geothermal, hydro, and wind sources. So investing in Kenya means access to ubiquitous green energy. And what I say to American companies all the time, if you invest in Kenya, you will be well on your way to meeting your Scope 2 and Scope 3 emissions goals. So ponder these words from the CEO of a major tech company that I spoke with recently. He said, "Supply chain diversification is now an essential element of our business, and so is the need to be totally green." And in that sense, Kenya seems to offer us a 1-2 punch for success. So when people ask me, why Africa, why Kenya, the elevator pitch is supply chain diversification and 93% green energy. And mostly, I have them at hello. Now, why Africa? I think all of you know these statistics, but 1 in 4 humans, a quarter of the world's population, and 1 in 3 working age people will live on the African continent in 2050. Africa is an incredibly young continent, the youngest in the world, with 60% of the population under the age of 25. And in my view, Africa is the last and largest emerging market. It offers the last big prospects for supply chain diversification and expansion of the customer base like Southeast Asia experienced 20 years ago. Africa, and in particular Kenya, reminds me of Southeast Asia 20 years ago. So why Kenya? So I usually am able to convince people they need to think about Africa, and then I try to convince them that their destination should be Kenya. So let's zoom in on why Kenya should be a target destination. First, Kenya is one of the most stable democracies in Africa. As you know, businesses care a lot about stability. 2, Kenya is the gateway to the East African market of almost 500 million customers. Kenya is the regional logistics hub. Kenya is the leading regional finance hub. And Kenya, with Silicon Savannah and its super smart engineers, is the region's ICT hub. Kenya is the leading destination for foreign direct investment and venture capital. And Kenya has a young, educated, entrepreneurial, and English-speaking workforce. And finally, one of the largest export markets for Kenya is the United States of America. So let me unpack just a few of those. Kenya is the gateway to East Africa with a market of almost 500 million consumers. 80% of all East African regional trade passes through the port of Mombasa. In addition, Jomo Kenyatta International Airport in Nairobi is the busiest airport in East Africa, served by 40 passenger airlines and 25 cargo carriers, including FedEx, DHL, and UPS. Kenya also has some excellent infrastructure, such as the standard gauge railroad and a series of new roads and a modern port. Kenya is already the regional financial hub for East Africa. Several international banks have been present in Nairobi for decades, and many global financial institutions like the World Bank and the IMF have established their regional headquarters in Nairobi. Nairobi has an important regional stock market, and the city hosts the necessary legal and accounting and consultancy services to preserve and accelerate this status. Now, many of you know all about Nairobi's vibrant technology community known as the Silicon Savannah. And this isn't one place, it's a state of mind. It's the feeling and the excitement and entrepreneurship that makes Nairobi the premier destination for tech sector investments and innovation in Africa. Many leading tech companies are already here in Nairobi. But also very impactful tech companies, local tech companies like M-Kopa, Copia Global, Semiconductors Technologies Limited, MarketForce, Power Financial Wellness, Kiosk, and Udu, and many electric vehicle startups are here as well. And I have met many of these companies, I have visited their operations, and I see what is happening here has many of the critical components that made Silicon Valley a reality. I think Silicon Savannah has almost the best chance of any other tech hub to grow to the scale of a Silicon Valley than almost anywhere else I've been in the world. Thank you. At the nexus of finance and technology sits one of the most impressive companies I've ever seen, and you know it well. It's M-Pesa. M-Pesa solved one of the biggest challenges in the mobile money market sector: mobile, secure, ubiquitous, low-cost payments. M-Pesa has over 50 million customers in 7 countries and is involved in over 70% of Kenyan transactions, powers over 5 million businesses, and catch this, 59% of Kenya's annual GDP flows through M-Pesa. Let me say that again. Nearly 60% of Kenya's GDP goes through M-Pesa, 70% of Tanzanian GDP. And I think M-Pesa alone demonstrates the brilliant business minds at work here in Kenya, devising African solutions to global problems. I think you all know this as well. Kenya has attracted significant foreign direct investment and is a leading destination for venture capital on the continent. While venture capital flows decreased by 35% last year because of the recession, total funding in Africa actually increased by 8%. But even more impressive, while venture capital to Nigeria was down 36% and essentially flat in South Africa, funding to Kenya increased by 33% last year, one of the highest growth rates on the continent. Adjusted for GDP, Kenya receives significantly more venture capital than anywhere else on the continent, generating roughly triple the venture capital to GDP ratios of Nigeria, Egypt, and South America. And unlike its continental competitors, who attract primarily fintech-led investments, Kenya venture flows are much more diverse, led by e-commerce and clean tech, followed by fintech, but agri-tech and enterprise investments. And what's even more unique for Kenya, in 2022, Kenyan women-founded startups raised $146 million in equity, again, more than any other country on the continent. You go, girls. As I said, approximately 90% of Kenya's electricity is currently generated from renewable sources, primarily geothermal, wind, and solar. Many U.S. investors are backing the expansion of Kenya's largest renewable sources, including the largest wind farm near Lake Turkana. BlackRock just bought out 1/3 of the wind farm in Turkana. It's amazing that Kenya has committed to reaching 100% renewable energy by 2030 and is already close to achieving that goal. From a workforce perspective, Kenya, as I said, is English-speaking, has high literacy rates, and a pretty strong primary, secondary, and tertiary education system. Every firm I have spoken with raves about the quality of their Kenyan workforce. I'll tell you a little story about MAS, the largest apparel manufacturer in the world. They looked across the globe for where they were going to diversify out of Sri Lanka, Bangladesh, and China, and they chose Kenya. They've been here since 2021. And they said to me, the Kenyan workforce is our best workforce in the entire world. As I said, the United States is one of Kenya's largest export markets. In total, Kenya exported about $187 million in goods to the United States last year, according to the U.S. government trade statistics. In addition, the United States exported $600 million of goods to Kenya. So about a $1.5 billion total U.S.-Kenya trade. It's fairly balanced, and it's expected to increase as the United States and Kenya negotiate the first of its kind bilateral trade agreement known as the Strategic Trade and Investment Partnership. And we hope it will be a model for the rest of the continent once that is done. The other thing I heard you talk about was AGOA. I have a lot of confidence that AGOA will be renewed. Everything is always a challenge. We have a divided government, just like you do. But I think we're feeling very good about this. You might have seen President Biden's statement on the desire and confidence to renew AGOA at the AGOA Forum in South Africa, and Anthony Blinken also gave a video underscoring the importance of the renewal of AGOA. So I think we're feeling pretty confident about this, and it could happen as early as the first quarter. So now you know why I'm so enthusiastic about the Kenyan investment climate. But I always say to investors, there's room for improvement, like in every country. And the first is taxes. Kenya must have a consistent, transparent, and fairly administered national tax policy to attract and retain foreign direct investment and accelerate economic development. As you all know, more work needs to be done to establish a durable tax framework. But the government of Kenya introduced many changes that will make Kenya more tax-friendly for investors, such as removing the export services tax and provisions to accelerate VAT refunds. But implementation of some of these changes remains a challenge, especially given Kenya's tight fiscal constraints. Without a doubt, corruption is also a critical issue, and one that has to be addressed for Kenya to reach its full potential in all areas of development. Corruption, as you know, leads to misuse of public resources, it slows economic growth and job creation, and damages the investment climate, as well as undermining equal participation in the prosperity of this country. Corruption remains a challenge here, and much more needs to be done. Debt to GDP. Kenya, like many developing countries, is burdened with high debt, limiting its ability to fund public services and infrastructure in line with its ambitions, especially given the rise of interest rates. What I learned since I have been in Kenya, when we in America raise interest rates to control inflation, because we see the same inflation around food and fuel that you do, we get a head cold. The rest of the world gets the flu. And so our rates are 5–6%. Rates here now are running 15% for three-month debt. However, according to the IMF, Kenya's debt to GDP ratio is about 69%, but it's not an outlier amongst other regional averages. For comparison, Malaysia's debt to GDP rate stood at 69% also in 2021, while India's debt to GDP ratio was 83%. So it's not so much the debt to GDP ratio as it is the interest rates right now that are squeezing the government. Manufacturing. This is an excellent opportunity to put to rest the argument that Kenya is not a manufacturing country. True, Kenya has room to grow in this sector, but manufacturing is happening here. And let me give you a few examples. Do you know Gearbox? Gearbox is a high-mix, low-flow electronics manufacturer in Nairobi, and they run what we call a state-of-the-art surface mount assembly line. And in November of 2022, they began manufacturing Raspberry Pi's Pico product for the African market. Gearbox's production quality now meets or exceeds that of Raspberry Pi's other production sites in Wales and Japan. And they're producing here in Kenya a first pass yield of 99.6% in precision manufacturing. Semiconductor Technologies Limited, a US-owned semiconductor manufacturing and nanotechnology company that's domiciled in Nyeri, is growing rapidly and has hired more than 80 Kenyan engineers in the past 2 years and has some very interesting test runs of unique niche semiconductors. Kenya's Revital Healthcare is one of the largest manufacturers of medical products in Africa, producing 48 devices and exporting to 28 countries. Isuzu has operated its East Africa assembly plant in Nairobi since 1977, selling more than 90,000 units with more than 15 models. And more exciting than that is there's also a robust and growing e-mobility manufacturing and assembly industry in Kenya. Kenya is the future, I think, for Africa's 2- and 3-wheel e-vehicles and e-buses. In fact, the manufacturers here are having trouble manufacturing enough boda-bodas for electric boda-bodas for the market. And last but not least, we have to talk about apparel and apparel manufacturing. Last year, Kenya recorded its highest ever apparel exports to the United States, over $540 million, employing nearly 200,000 Kenyans, mostly young women. Leading apparel brands sourcing from Kenya include PVH, which includes Tommy Hilfiger and Calvin Klein, Contour, which includes Lee and Wrangler, and several more, including Walmart and Levi's. And what we hear from these brands is that they want more Kenyan apparel manufacturing, both because of the high quality of labor and Kenya's leadership in renewable energy. Brands are steadily moving production operations to Kenya from Sri Lanka, Bangladesh, Ethiopia, and China because of what Kenya has to offer, and more is on the way. I will also say it would be very helpful if Kenya could bring back its cotton industry. Kenya used to have an enormous cotton industry, and what the apparel companies say is we can grow here for a few more years, but ultimately we have to have the fabric mills here that we can, so we don't have to import fabric from other places around the world. So I say there's something happening here, and it's abundantly clear to you, and I hope it's clear to me, and I hope it's clear to you, the benefits that Kenya has to offer. And since the president was elected in 2022, his administration has been committed to improving the business climate. And following months of deliberation and consultations with the business community, the government of Kenya has announced a few of these reforms at the March 2023 AmChen Regional Business Summit. And I thought I'd just give you a few of them because it really does underscore some of the changes that have been made. First is alignment of Kenya's data protection regulations with the multilateral global cross-border private rules framework. When businesses think about investing outside the United States, they don't want unique privacy rules for Kenya, one for Ethiopia, one for Tanzania, one for France, one for Italy. They want a global standard. And so harmonizing the global privacy standard and data regulations I think is going to be a big addition here. Elimination of the VAT on export services. Call centers and BPO is a big opportunity here. Those had a tax on those services called export services. Those export services tax are now gone. Removal of tax on stock-based compensation for employees of startups. If you went to work for a startup and you got $10,000 worth of stock options, the government of Kenya wanted to tax you 30% on those stock options before there was even a liquid market for that stock. And so what happened is people didn't take advantage of their stock options. Well, the whole point of joining a startup is risk-return trade-off. And so there is now no longer any stock-based compensation for employees of startups. Elimination of the domestic equity requirement for ICT companies. Up until June of this year, if you were an ICT company, you were supposed to have 1/3 of your shareholders be Kenyans. And what I said to the government is, if you want Amazon Web Services here, trust me, they are not going to spin off Amazon Kenya and sell 1/3 to Kenyans. So you've got to get rid of this environment and this rule if you want big American companies in the technology sector coming here and staying. And you probably saw about 3 months ago, Amazon Web Services opened their development center here and will likely be bringing their e-commerce company. You probably saw they're launching e-commerce in South Africa. Kenya needs to be next on that. Commitment to adhere to the OECD two-pillar solution for digital services tax. This is another one where you can't have your own digital services tax. You've got to align with a global standard. And by the way, the global standard is actually higher than the Kenyan digital services tax. So I think that could actually be good for Kenya and good for the Treasury. And then finally, a commitment to revitalize Kenya's special economic zones to maximize their competitiveness. They are not as competitive as those in Ethiopia and some other countries, and Kenya needs to be the most competitive, hands-down country in Africa. So, lots and lots of potential in agriculture, in apparel, in ICT and innovation, and in energy. So I think there's lots and lots of things happening here. I will also point out that I think Kenya has an opportunity to really make a move in the creative economy. I think you were talking about that earlier. Now, you probably noticed, and I think this is sort of a creative economy, it's really sports. You probably saw that the NBA has opened an office in Nairobi. And they're going to build 6,000 basketball courts at schools to start the pipeline of young Kenyans playing basketball. Why are they doing this? They want a pipeline for basketball players. And we actually had a very fun meeting with the president because they brought a lot of African basketball players who do play in the NBA. And I don't know if you saw that tweet or that X where Ron Harper, a former NBA player who's 7'2", he's with the president, and he's got the basketball up here, and the president's like trying to jump. The president looks like a midget relative to this. I mean, it was very funny. It was very, very funny. But right behind the NBA is the NFL, Major League Baseball, Major League Soccer are all looking at Kenya. And then, from an entertainment perspective, the Grammys. The Grammys have signed an MOU with Nairobi, or with Kenya, to be one of 4 founding Grammy partners here in Kenya. And pretty soon they're going to pick where the Grammys should be headquartered in Africa. And what they're doing, you know the American Grammys, right? And then they did the Latin American Grammys, which are now bigger than the American Grammys. They want to do African Grammys. And you could say, gee, Lagos kind of has it all over Kenya. But let's see about that. So, to conclude, I think Kenya offers a tremendous opportunity. And I think the biggest challenge is the narrative on Africa and the narrative on Kenya in the United States. So as members of the diaspora, you can download this presentation. It's on the American Embassy website. There's no trademark on it. Use it, take it, adapt it, do whatever you want. And all the data is correct. We've doubled and tripled checked it, so you won't be called out. And please, you are the ambassadors for Kenya. And we've done, as I think you know, 4 road shows. We went to New York, to Chicago, to Silicon Valley, to Los Angeles. And it's been a remarkable reception to this story. So thank you very much for inviting me, and thank you for everything you do for Kenya. No, I'm happy to take some questions if you want.
As a U.S. citizen, you did great.
Thank you. Yeah, I'm happy to take a few questions if you'd like.
Yeah, please have a seat. Yeah, I think we can take one question. Any other final question?
Thank you. And as a U.S. citizen, thank you very much. You are an incredible proponent for this beautiful, beautiful country. And I would like to add one more section, maybe a slide to your presentation, which is the diaspora, which I think is something to really brag about.
That's a good idea,
yeah,
actually. That's a really good idea.
You know,
I'm mad I didn't think about it before I got here.
Well, I'd love to help you with that. We have a whole global UCLA Oxford Center on diaspora economy. For example, the remittances are about 4% of GDP, which is, we're talking 0.3% of net inflow FDI. So
it's about $2 billion a year.
Correct, actually. So it's from the U.S.
I know,
right?
$2 billion.
But $4 billion altogether, but $2 billion from the U.S.
U.S. and $4 billion overall. Yeah.
Exactly, and that is the tip of the iceberg. We probably have one of the most high per capita exporters of remittances inside the United States and to anywhere in the world going to Kenya.
Yeah.
So the key issue is how do we transform that remittance into savings? And there are problems with it right now. Right now it's still dominated on a cash-to-cash basis.
Yes.
We just launched today with Kenyan Diaspora Alliance with MasterCard a free bank accounts regardless of immigrant status in the U.S. with connected to remittances, which are going to be the lowest in the market. For what purpose? And with Equity Bank as a partner to create bonds, savings bonds for sustainable development, and which will be announced in COP on Monday. So we'd love to put that on your slide. I think it is a huge, and your role could be really spectacular in that.
Thank you. Good.
Okay, maybe that's the last one. Just introduce yourself briefly.
Thank you. Excellencies, I'm Mwangi Derito, and my question goes to technology transfer related to universities and TVET. What is the American government doing to support the Kenyan education system to get into technology and better value in the TVET, that is a technical and professional education training system? Thank you.
So we are doing a number of things at the U.S. Embassy, but perhaps most importantly, it's the U.S. tech companies that are doing more even than we are. Whether it's Google, Microsoft, IBM, Oracle, VMware, Hewlett-Packard, they all have outreach and training programs to many of the universities and to the TVETs for training. What is true here, if Silicon Savannah becomes the Silicon Valley of Africa and starts growing at this kind of a rate, you're not going to need 5,000 computer science engineers a year, you're going to need 50,000 or 100,000. And so where is that training going to come from? The only way I know how to do this is work with the universities, these big tech companies, and we can provide some modest assistance, and then it's going to have to be on-the-job training. That's how we did it in Silicon Valley. You basically come with a computer science degree or some kind of an engineering degree or at least a math degree, and then you train on the job. So I do think it's a really important thing. And by the way, I think the diaspora can help there as well. I think we should find some universities in America that we can partner with Kenyan universities. I think like sister relationships. The question I always put to Kenyans is, who is your Stanford University here? Stanford was the anchor of Silicon Valley. It was a combination of a big tech company, Hewlett-Packard, the venture capital community, and Stanford. Those were the three things, and connectivity. So Kenya has good connectivity. I think you'll have better connectivity to all parts of Kenya. You have big tech companies here, M-Pesa, Safaricom, as well as Google and Microsoft. It was funny. When we were at AWS for their opening, the CTO of Safaricom was the chief guest. And he walks through the engineering team and he goes, okay, I knew like 3/4 of your engineering team. Meaning AWS had hired a big chunk out of Safaricom. But that's the way it works. I mean, for years, HP gifted, if you will, employees. And then the next generation of internet companies gave employees to the next generation of startups. That's how it works. So I think that's really important. Who is going to be, what's your anchor university going to be? Is it Jomo Kenyatta? Is it University of Nairobi? Is it Strathmore? Who is it that can really be the Stanford, the MIT, the science, technology, engineering, and math hub of the universities here? And so if you have contacts with universities in the United States that you could marry to some schools here, I think that would be great. I think we have one more. Here's a coming your way, and then we'll go.
Thank you. I didn't think you saw me. Quick one. I was hoping that you would talk on impact investing, and especially when it comes to climate change and what it's doing
Yes.
to the lesser. Because my name is Irene, and I work for Total Impact Capital. It's headquartered in DC, and one of our focus areas is impact investing. It would be nice to hear what your view or goals is
Yeah.
on that front. Thank you.
So I'm all about impact investing. But my view is, and this may be a little bit controversial, is the returns have to be there first, right? You may sacrifice a bit of returns for the impact that you could have for, CSR goals and other things, but ultimately, Kenya has to have companies that are globally competitive. And that way, we should end up with lots of impact investing because it's so profitable, you can do both. You can do good while you do well. And when I was just down at Super Return Africa, down in South Africa, just on Monday, Tuesday, Wednesday of this week. And the other story I think we need to tell here is for the continent of Africa, returns are lower than in other parts of the world. I think they said 4.7% versus upper teens in some of the Western countries. But what they also said is, if you look at it by country, it's not true for every country. And so I think, Kenya and others who have higher returns need to make sure that investors are aware of that, so that they explore what's happening here, and then the icing on the cake may be impact. I don't know if that's how you think about it, but I think ultimately it's a competitive world, and people want to do good, but they're also, fund managers are evaluated on how well their portfolios do. So we have to create an environment here where these companies can be really, really profitable.